Okay. So, good morning, Grand Rising. We're getting into it. We're analyzing GU this morning. And as you can see, we had a liquidity grab down here, had a lovely impulse pushing all the way up into these levels. Okay. And now we may see this market come back to close up this imbalance. Okay. And potentially continue on to take the liquidity above these highs. Okay. The market's captured the liquidity down here. We may see this market retrace, take some liquidity to push above these highs. And potentially go and fill a level that I have up in here. Okay, but we are going to read and react to what price has done. We can see right now it's made these equal highs. Okay, here and here. All right, very equal highs have been formed. Okay, and at the moment the market is just thinking about it now, whether or not it should go now and go and break structure above, or whether or not it wants to come back down first and fill this imbalance. Okay, so it's just stopped me out here for $1,300, which I have no problem with. All right, for me, that's about a 1 to, I don't know, 10 or 1 to 9. I was risking about $150 or something like that. All right, which is great. Little trade just to get the morning rolling. But have a look at my concerns. This market may want to come down and close. This is 5-minute imbalance in here, and tap into the structure that it broke. All right. So either tap into this structure over here at this level where you can see my this retracement tool. Okay. It might want to come very, very deep in here and tap into this first break it made down here, where we can also see some little imbalances. All right. If I just do that, you can see some little imbalances in here. Okay. Or in here. So we're watching it. So right now, what we're waiting for is unfortunately, it's going to be on quite a small time frame. Is it tapping into these areas, and then for us to see some sort of confirmation of structure being broken to the upside if we're interested in getting in the buy. All right, we are interested in getting in the buy, some sort of break of that structure. Okay, but it's going to be on a small time frame because the market's moving quickly. All right, it's not moving, it's not making structure in this particular impulse, over larger time frames. Okay, now let's have a look on a larger picture. This is just some smaller scalps. This morning that was a small little push and understanding what's going on. Let's have a look on a much bigger picture to try and form, what we think is happening. Now, look, I'm not changing, my thought process at the moment. Okay, the market is ultimately trading within this range here, this high and this low, here to here. So the market's in here. Okay, but the market has been coming from and has been doing historically. All right, historically the market has been bearish. Okay, the market has been historically bearish. Okay, making some lower lows and some lower highs. Okay, historically. And if we're going to just take the consideration, take into the principle if we want to buy cheap and sell expensive, we are right up on that sell line. On a much, much bigger picture, we are right up against that sell area. Okay, what do I mean by that? I mean, we're right up against this market being expensive, though it's been trending down and prices have been decreasing. Okay, been falling, but within that trend, we are up at, we're quite expensive for a market that's been falling in price. We're up against here. All right. Now, when we was looking at this market from a daily perspective, we saw some great daily structure as the market tapped our area where we want to sell from, broke, swing daily structure, smash. And then we've seen this retracement push back up in here, which we was for all purposes looking at it like, we didn't really want to see it. Or ultimately, we had a thesis that we wanted to see it turn around at that 50% level, okay, which is this green line you can see here. Okay, that 50% level, this green line. Okay, now we pushed a bit deeper than that into the 618. Okay, pushed a bit deeper than that into the 618 area, and then we're seeing this market having some sort of reaction. And have a look at the reaction. The reaction over here is the market pushed on. It hasn't broken 4-hour structure as such, I don't feel. Okay, but we've seen a reaction from here. We've seen a retracement, potentially back into those levels. And ultimately, maybe the market wants to push up into here, which is what I said that smaller move was, pushing up into this yellow area to ultimately then continue its bearish action. So I'm talking about it's possible the market wants to do this, especially with Fed Powell speaking today, to continue doing something like this. Maybe, we do not know. Now, on a 1 hour time frame, we can see a little bit better in regards to structurally some things are broken. This wick here has broken these little lows over here. Okay, this wick here is wick action. It had no close, hasn't closed on the 1 hour time frame outside here, but we've definitely seen the market was dancing in here. We've seen some sort of reaction in here. All right. So at the moment, if I wanted to go on a smaller fraction, yeah, the market is trading within here and here. Okay, and we want to see some structure broken. Yeah, I just think to myself, maybe it's possible the market wants to do this first and then decide to start coming down here and doing this. Maybe. However, if we look at the impulse in regards to retracement levels from up at the top here down to this bottom wick, okay, from this place here to here, we're not quite at the 50% level yet, okay? If it was to take this leg of all these red impulses here, we are sitting at the 50% level here, but we've tapped it already, which makes me feel to ourselves that if we've tapped it already, why are we back up here? Hence the reason why I think this may happen, okay? So this is against, ultimately, the overall direction I want to be trading it. But we might see a little 30 pip push into this area. And then when we do, I am looking for sells from that area, okay? I'm going to be looking for sells from this area. Okay. I'm not trying to say that I'm necessarily looking for buys into that area, but I'm just saying from this area, I'm looking potentially for sells. Okay. But I'm not just going to be hitting the button. I am going to be, making sure I can see a structure break. Structure must break, must give me an indication, give me some better information of what the market wants to do. Yeah. It can't just be the case that I'm just hitting the button. All right. That's not how I trade. I can't just hit the button. I need to see some sort of confirmations that something's going to happen. At the moment, the market is dancing around in this area, and it's, whether or not it wants to push up right now, like I said, and break past that high and start pushing, keep pushing up or not is the question. Okay. It's the question, right? Have a look on a 1 minute time frame. You see how the market's pushed up here. It's come back down here, making lower lows, lower highs, lower lows, lower highs, not quite making lower lows. Then we've got a push up here, making some little higher highs on a smaller time frame, higher lows, it's essentially going sideways in here. It's working out what it wants to do. Okay, it's working out exactly what it wants to do in here at the moment. All right, let me pop an alert above here. All right, I am no longer in that push as I close myself out a little bit early. Just happy to take what was on the table, which was good. You have to be grateful. You have to take what's given to you. All right. And right now, like I said to you, I do have opinion that maybe this market wants to push up into this level. I would prefer to see it push down in here first to close these imbalances. All right. Close this imbalance in here. Boom. Get back down to where it kind of broke past this little swing structure over here, or this little structure of this consolidation here. But we might see it push quite deep into, maybe some of these levels over, maybe like kind of in this level here. Yeah, we kind of broke this level here, made a retracement. It might come back down into these kind of area here. Okay. However, like I said, I cannot just hit the button. I must see some confirmations of what may or may not happen. Okay, so right now I'm sitting here thinking to myself, maybe we push down in here, it's possible. Maybe we just break structure in here and just keep going for it. All right. I don't know yet. Okay, I don't know. And I haven't got no chips on the table at the moment because I've taken them out. Okay, so fine. Let's go look at another pair. Let's go look at US 30. US 30, as we can see here, I'm going to delete everything off this chart. I'm going to go to our larger time frame to be able to understand how we mark up the charts, understand how we look at market structure and price. I can have a look at that chart. Okay, that chart is designed to only go up. It's designed to be bullish. Okay, because it's the top 30 US companies. Okay, and every single Monday morning they sit around the table and they talk about how to make more money. They don't sit around the table and think about how can we make less money, all right, for our shareholders. They talk about how can we make more money. That's what they speak about, okay? So at the moment, you can see I've got these two angles. I've got one angle taking into consideration COVID, because COVID, even though it was an anomaly, is still a data point now, okay? And I've got this other, angle based upon what the market has been doing, okay? And the top end of it, okay? Let's drop our time frame down to the daily, because daily is a lot more important to us as day traders. We want to know what's been happening. So what's been happening is the market was bearish in here. Let me make this a different color. Was bearish. Something changed, and we made higher highs and higher lows and higher highs. And at the moment, as you can see, this market is bullish. Yeah, breaking bullish, breaking structure to the upside. Okay, like so, pushing up within this range. Now we've just broken above this high here. Okay, capturing liquidity above these levels here. There was liquidity above these equal highs, pushing up into these levels. And the question is, where is this market going? All right. Is this market going to trying to push all the way up into this level here? Okay. Or is this market at the bottom of this range here? All right. Near the bottom of this range here, trying to push all the way up into these levels in here? Well, we don't know. Okay. We do not know. On a 4-hour time frame, it's a little bit cleaner. I can get a little bit tighter in here on the 4-hour. Looks a bit more like that. Okay. See, on a 4-hour, we're at the bottom of that little yellow range here, where we tapped into it, and we're just making this impulse. It's very, very, very bullish at the moment. All right, very, very bullish at the moment. Okay, which aligns, okay, with when the US dollar is. Let's look at the Dixie first before I put my foot in it. All right, let's have a quick look at the Dixie. When the US dollar loses strength, we typically see indices rallying, okay, because ultimately it's cheaper to invest in US companies, okay. So if you see here, the market fell here in the Dixie. Let's have a look here. Look, the Dixie was falling out of space, making this retracement, falling in value. The dollar falling in value. When the dollar falls in value, typically we see indices, okay, rising in value because it's cheaper to invest in US companies. Does that make sense? That must make sense to you. All right. Because obviously the dollar's getting cheaper, so therefore it's cheaper to invest in those US companies. Their values, the intrinsic value of those companies in the United States, so the dollar value is falling. All right. So it's a little bit more attractive. All right. So that's the correlation that we can see there. But if we look at the Dixie right now, it's possible. Have a look. It's possible that Dixie is falling to a level. Have a look. Where is that Dixie falling into a level of? Where is that Dixie falling into a level of? Falling into a level of demand, a level that possibly might be a good area if you could trade the Dixie, which you can't just trade the Dixie, all right? Of where this market might start breaking structure and getting quite bullish again, meaning that potentially we might see this US 30s turn around. We might see this GBP USD, because the USD is going to get stronger, gain some weight on that side and start falling to hell, which kind of coincides and in lines with what I said, that ultimately I want to be selling this market. Why it pushed past the 50% area, could be because of all of this news and, Fed Powell speaking today, et cetera, et cetera, et cetera. So everything kind of aligns there. All of that analysis between GBP USD, US 30, the Dixie kind of aligns, all kind of makes sense. All right. But that alone, saying that it just makes sense, isn't going to be the sole reason that you're going to be profitable from it, because you still have to find an entry. All right. And you still have to be able to execute on that idea. But ultimately, let me explain it one more time. We've seen the US 30 rallying as the dollar index has been losing some strength. When the dollar loses strength, it becomes more attractive for people to invest in US companies. Hence the reason why the US 30 has been rallying. However, if we look at the Dixie, we're getting to a level down here, in here, which is potentially an area, that demand area where people may, be interested in buying into this level, possibly. Okay, because if we've seen here, I've just zoomed out, in fact, and now I've got a slightly different opinion. Okay, I've just zoomed out, I've got an ever so slightly different opinion. Okay. All right. So I've just zoomed out of the dollar index. I've got a slightly different opinion that the dollar index might continue to fall to hell. Now, I'll tell you why I say that. It's because the market has been, pinging, ponging, pinging, ponging, pinging. Maybe there's a pong in there. All right. Maybe there is a pong in there, and maybe the market is going to break outside of this range of these two yellow lines and come down into these levels here. Maybe the dollar's going to fall to hell and do that. It's possible. It's not impossible, especially right now what's going on in the world. However, I would like to see, even if the market was going to do that first, I'd like to see it come in here and close this imbalance first, yeah, before doing that. But we don't know. We can watch it and we can see, all right? So that is a much larger outlook that maybe this market's going to get down to these levels. But whether that's going to happen anytime soon, because this is the weekly chart we're looking at, is something else. Maybe this is a 2024 scenario of the dollar index falling to these lows over here, okay? Either way, still sitting here watching it. Have a look. Like I said, this GBP USD is going sideways at the moment, and I'm happy that I took my money up here, yeah? Because I at the moment now, I wouldn't know what's going on. Now, I could say I want to stay in the market because my entry was all the way down here, but I was happy with my profits. If I see a big red candle come out here for nowhere, I'd be annoyed. Even though I could get back in and the market's probably going to rally back up. But why? When I can still wait and I can do the same thing again, but now with the £1,500 or $1,300 in my pocket. Okay, so I'm waiting. I have my alerts either side of this little consolidation. And ultimately, my outlook for this is that the market wants to try and get up into this yellow level. That's my idea. Okay. Now, I am not going to marry that idea. Okay. I'm just saying that that's an idea that I have with this market, that it wants to get into this yellow level. We've currently made some equal highs over here. There's liquidity sitting above here, but I think to entice, sellers and that the market might push down in here first. Okay, give us a lovely entry in here as we see a break of structure, then go for that liquidity, 230. And then start pushing and dancing around here before maybe we see some Fed Powell speech, some volatility and some push into this area. That would be an idea. That would be me, creating the whole narrative, the whole story, all right, of what may happen. Okay, so if I was to draw that, it might look like something like this. It might look something like this. Then something quite fast like this. Oops. Yeah, before hopefully deciding that we want to do something like this. Okay, now let's try and measure out this distance. From down here to up here, how far is that? Yeah, it's only 45 pips. I'm just measuring it out because GBP USD doesn't move thousands of pips every single day. It's got a certain range that it moves within. And we're able to use the average daily range just to give us some insight of what the market may or may not be able to do in one day. And plus, Fed Powell is going to be speaking. We could see additional volatility. And that's today. If the Fed speech, with Jerome Powell speaking, we need to understand that we either stay away from the markets or we place our trades and we manage our risk accordingly. That's what happens. All right. Some people will stay away. And that's their decision. That's fine. And some people will want to be involved. But what I would say is you don't want to be involved too close to when the speech is happening. All right. You want to be involved from a long time beforehand with your stop a good distance away, because the volatility that's going to happen may mess with you whether you're right or wrong. All right. You might say, yep, I'm in for the buy and want it to go up. And the market might do this and then go to space. Your stop is not going to be able to weather this volatility, not unless, for whatever reason, your stop is a furlong away from the bomb site, the blast site that may be Fed Powell's speech. Okay, so just understand that. If you're in the trade beforehand and before the speech is happening, before volatility starts picking up and you're in good profits, I'd say take your profits. Or at least, really move your stop up. Because you have to understand, when extreme volatility comes in as well, you can get slippage of the markets jumping over your stops. Yeah. And you think to yourself, yeah, it's going to stop you at $100. And you look again and it stopped you out for $300. This is possible. All right. So if you're in good profits, sometimes it might be in your interest to just take those profits and keep it moving. Okay. All right, cool. I've got my alerts in here. One did just ring as it wicked above this little area. Not quite a a close above that is saying anything. But to be perfectly honest, that I want to get in here. I actually do want to get in here to push into this level. Yeah, I do. Yeah, but I'm not going to force it. The market is currently doing some sideways action here on the 5-minute time frame. You can see it's currently in here, made a high, retraced back in, closed this little imbalance that was in here. But there is this big gaping wound of an imbalance over here that sits, inefficiency sitting here. And I don't want to force it. All right. So I'll be looking at seeing a nice close on the smaller time frames, but that coincides with at least a 5-minute time frame. Now, what do I mean by that? I mean, sometimes you'll be looking at a 1 minute, looking what's happening in the 1 minute time frame, but I want to see closures coinciding with 8:55, 9 o'clock, 9:05, 9:10, because that means that 1 minute closure will also be a 5-minute closure. Okay. Like this little volatility that's happening here, I don't want to get involved too eager, especially as I just took money out of the market. I don't just want to give it back, especially when ultimately I'm saying that the real energy for me is to be able to try and get into some sort of trade like this. I just think that this might not happen until after the speech. We might not get in here. Okay, which is 4 o'clock. Okay. Let's go look at something else. Let's go look at something. Is there any pairs in particular anyone wants me to have a little glimpse at? Today is Fix It Friday. So is there any questions about the strategy? Anything that anybody wants to have a conversation about? All right. This is EJ. Like I said, we have been getting some really good feedback from different units. All right, from some different unity traders. Have a look at that GU. Yeah, it's at the moment having a little push over there outside of this little box now. Okay. And looking at the time, yeah, it's 54. And, you know, maybe this right now will be the first closure break outside. This was, I guess. Let me just see. Just trying to see. This was the first closure, bruv. And then we're seeing this market open up here, make a retracement, make another. It's very small. And to be fair, it's like I don't need to get involved in here, but just to keep me engaged and looking at this chart, maybe I'll take a very, very small position in here and just see if we're going to push all the way up into those levels. Maybe I'll back myself. It's not a 10 out of 10 trade. It's probably not something I should be talking out loud. See, sometimes when it's a fine line between when I'm teaching and making sure you guys are only looking at 10 out of 10 things, not really on the 1 minute time frame. I shouldn't be down here. All right, and also knowing how I execute trades. Because I execute trades. My way I execute is, and I heard another trader talking about this, I put feet in markets. All right. So say, for example, let's say an example that I normally trade with a 10 lot. Just for an example, to 10 lots. Okay. Sometimes when I'm exploring and I want to be into certain things, I might just put a little 1 lot out just to explore this thing pushing up. And what will happen, what that allows me to do is if my ideas are correct now and that little 1 lot starts going up and I get up here and I'm $200 up, well, now I'm in a position to be able to take another trade for $100 or $200, and there's no risk to me whatsoever because I've got this cushion that I've made from a little smaller, much smaller lot size trade. Okay. So yeah, that's a little bit of a strategy that I do. There's a couple of things that I do as well, guys, which, you know, when I'm scaling in positions, for example, I make sure that all of my positions are risk-free, apart from the last position I put in, okay, which I'm able to track manually because it's hedged with my profitable positions. This is a bit more advanced. I was having a conversation with Alan about it the other day. And it's just a way in which you can weather any volatility and still make sure that you can end that trade with a positive margin in profits. Okay. But it's a bit more advanced. It's something that we'll go through in more in advanced sessions. All right. So at the moment you can see EJ. I drew this big box around EJ saying that EJ is trading within this box. Okay. We are still within this box. And, you know, if I drop down here to my daily time frame, you can see how EJ has been making higher highs, high lows, higher highs, higher lows, higher highs. And we're still within this trend of these 2 yellow lines. I'm going to change to a different color just so that we can see it. I'm going to make them green. We're still within that trend. What does that mean? That means that everyone's still wearing baggy jeans and that trend within that range. Okay. So therefore nothing's changed because everyone's still wearing baggy jeans. Now within this impulse here, we've seen this 4-hour structure making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We can see that the market's price actually broke outside of that trend. Okay, so something did change slightly. So they were wearing baggy jeans. Now everyone's wearing, I don't know, baseball caps all of a sudden, where everyone's wearing woolly hats. Something's changed. The trend has changed. Yeah, and within that little range of impulse down here, it doesn't mean it's going to break outside of this bigger range and everyone's going to stop wearing baggy jeans. It doesn't mean that. But it means that something else is going on within that area because we've broken this structure here, swing structure. Or we've broken, I don't like to say swing structure because for me, a swing level is the swing before the highest point here. All right. So, down the market is still trading, in my opinion, between here and here. Yeah, because this was the last swing level over here. Okay. Or if you draw it a little bit better, maybe I have to draw my lines quick, kind of in this level here. And to this high. And at the moment, yes, we're making a retracement and we're breaking some minor structure in here, okay? But like I said, the market could come down to this green area here and decide it wants to continue going up, wants to continue pushing up. Let's drop it down and have a look at the structure on a smaller time frame. The structure on a smaller time frame is what we was discussing the other day, is the market here was trading within this red and green area here, bearishly, making lower lows, lower highs, lower lows, lower highs, and then the market's made a higher low, and we're here. So ultimately, we're now currently on a smaller time frame trading between here and here. All right? Because the market came down here, made this low, then made this high. So it's made a higher high. All right? Then these little minor structure in here, this minor structure. But at the moment now, yes, it's made a lower low. But the question is, are we going to make a higher high? So Messi made a higher low. Are we going to make a higher high? Because maybe this was just mucking around. Just did this little push above all of these little minor structure in here. And then maybe it came back down here to muck around. And now it's going to continue going down here. Maybe. That's why we wait for the confirmation of the indication, the correction, and the continuation. At the moment, we've got some slight indication. We've got some correction. But, what's our correction saying? Let's drop our time frame down to our 15-minute and have a look. So the market pushed up in here. The market came down to here. The market looked like it was ready to continue as it started breaking 15-minute structure. Have a look. Broke 15-minute structure, retraced, closed back above. You could have taken that trade and the market would have taken you up to here. Boom, boom, boom. Then all of a sudden, something's gone on. Decided to smash all the way back down into these levels. And you would have probably broken even or got some little bit of profits here. But at the moment, we don't know what's happening because why should this market be coming down below this level? Why? On the 15-minute time frame, I don't know. So we've seen this big break, which is a break of this structure here. Let me do this. Break of this little impulse here. It's broken that structure in here. So once again, this is an indication. I'd like to see some sort of correction and to see whether or not this market wants to continue doing this. Or maybe this is just it being stubborn, coming down here to do something on the basis that, no, actually, we are going to keep going and doing this. Okay. Now, where might this be going? Well, it might be going and tapping into some inefficiencies in the market. All right. Some inefficiencies in the market are imbalances. We can draw it by hand, or I can use my little tool over here. So can you see this little imbalance in here and this little area here? This is what I'm talking about. Maybe the market wants to come down and get a cheeky wick in here and then keep pushing all the way up in here. I don't know. But at the moment, it's not something that is clearly showing me what it wants to do. It's not fully clear. Okay. Yeah, on a 5-minute time frame, we can see some structural breaks of the market breaking structure and doing certain things. Yeah, I suppose so. And if I was looking at this at the 5-minute time frame, we could have decided, yep, look here, it's broken structure, 5-minute, made a little retracement into here, closed down below. We could have got into that trade and maybe we'd have been a little bit of profits right now. But looking at it from a slightly larger perspective, we're now down at the bottom of this little line here. All right, that blue angle that I put in here. Is the market ready to start turning around here? I don't know. I don't know if the market wants to turn around here and this little level in here and start pushing up. Doesn't want to break this structure. I don't know. All right, but what I'm going to do is I'm going to pop an alert in here if when it actually breaks the structure, which might be any minute now. All right, I'll pop an alert in here, add an alert crossing down. And maybe the market wants to come down into here, close these imbalances in here before deciding it wants to push back up or not. I do not know, because the market, as I said, is trading within here and here. And if we understand that it's trading between that yellow line and that yellow line, we'll also understand that we are in the middle of that range. We're in the middle of here and here. Well, the middle to low, yeah, but you get what I'm saying. So I don't really know. It's not definitive of me knowing what's going on. So like I said, I'll pop an alert in. I thought I did. Did I? I thought I did. Did I? I thought I popped an alert in here, crossing down. Maybe I'm going mental. All right. And I'll pop also an alert above this 15-minute candle high over here. If the market is doing something else. I don't want to just sit and look at it with my mouth open. All right. I'm going to look at another pair, which is the Nikkei. All right. Japanese index. All right. And I want to just have a quick look at the Nikkei. All right. We're going to zoom all the way out. All right. We don't do the ones that we made earlier. We remove all of our indicators and we understand what's been going on with the market. So as we can see here with the Nikkei, we can see, like the US 30, this market is designed to go up. All right. Japanese index. We can see over here COVID and the impact it had there. And similarly to US 30, we can take COVID as a data point if we wanted to. I'm going to put it in there, but I'm going to fade it out. So I don't really like using COVID as a data point. I think COVID is more of an anomaly. All right. And for that reason, you can see that we are right at the top of that range and, well, near the top of that range. But the market already came and tapped the top of that range once before, and it pinged and didn't quite pong. It pinged, started moving down here, and now we're like, not too sure about it. Very similar to the US 30 scenario. All right, very, very similar to US 30 scenario. So the market here was making some lower lows, lower highs, some lower lows, some equalish highs, some lower lows, some lower highs, down to this little level here, and then it started to change. Made a break of structure W in here, boom. Yeah, retraced, and now started making some higher highs, higher lows, some higher highs, some higher lows, and we're just kind of sitting at this little level in here. All right, we're sitting at this level in here, and for me personally, I do not know what it's doing. All right, and I have no problems with turning around and saying I don't know what it's doing. I like saying I don't know what it's doing. I like being able to I don't know what it's doing, so I'm going to leave it alone. It's better than saying I don't know what it's doing and I'm going to get involved. All right, which a lot of us do. A lot of us traders, we don't fully know what the market's doing, but yet we're still here hitting the button. And that's how we lose the monies. Because even if we get into the trade and it starts going well, we don't know when to get out of the trade. We don't have any expectations. We don't get what it's doing or what it's trying to do. So I'm going to leave that one alone. I'm going to look at NAS, which is going to be very similar to what we've already looked at, but just let's see if the structure is any better. Okay. We're not going to do here's one we made earlier either on NAS. All right, we're going to also remove everything off it, and we're going to say, okay, no problem. We're going to do, put some lines in here. Put some lines. In fact, I'm not going to look at NAS. There's no point. We keep looking at the same. They're all the same. NAS, GU, US 30. They're all very, very similar. They're all cousins. You know what I'm saying? Let's go to the weekly. We can see it's in the middle of that weekly range. We go to the daily. It's in the middle of that daily range, kind of going sideways. I don't really want to trade or any middle of the ranges, to be perfectly honest. But if we're saying that it's already pinged, ponged, maybe it's a ping that's coming. Maybe it's a ping that's coming. Maybe, baby. Maybe, baby. On a smaller time frame, let's have a look at it on a 4-hour time frame. Look, this market is just going sideways. I don't know if anybody's in here trying to trade the sideways action. Maybe someone's trading the range, selling from the top, buying from the bottom. Maybe, okay. But nothing too overly excited for me to get involved in. I'm going to keep it moving. Let's go over here. Let's go to another pair. Ooh, let's pick a random pair. Let's go and have a look at gold. Yeah, let's go and have a look at gold with Kijay. Snap, we're on the same page. We're not going to do one we made earlier. We're going to delete everything. We're going to go have a look at what's happening in gold. Now, you guys have known very, very famously how I've identified these three kings. Okay, these are the three kings. 1, 2, 3. Oh, tremendous amount of liquidity sitting above those three kings. Okay, they are equal highs, triple highs. Yeah. And maybe the one was a little bit, but either way, they're an area, definite area of there. There's going to be extensive liquidity above there and all-time highs. Now, we've already spoken multiple times, and I said that we'd be in there bullish for our gold on the basis that, of what's going on in the world. What's going on in the world is that the world doesn't know whether it's coming or going. Unfortunate to say. We've seen a lot of things happen in the world: war, instability, lack of security, lack of confidence in the US dollar, lack of confidence in economies, rising interest rates, high inflation. There's a lot of things going on in our world. Yeah, I'm telling you. Okay. And on that basis, people see gold as a safe haven asset, an asset that potentially they say, you know what? The world's gone to shit. Okay. So what I'm going to do is I'm going to put my money into gold. Yeah. I'm going to, store my money in a place where I think is a good store of value, which is gold, which has practical applications, plus it has psychological value. All right, in regards to people just saying, well, I have gold. It's better than someone says, well, I have iron. All right, iron has a value, but you don't hear people saying, yeah, I've just bought a shitload of iron. All right, gold has more intrinsic value. It's more of a liquid asset that can be turned into cash globally. All right. You can go probably anywhere in the world with your bars of gold and be able to utilize them as some sort of, store of value. So you can actually turn them into cash or acquire things. Whereas maybe if you had a box full of iron, it might be different. All right. Though iron has some sort of value for sure, or aluminium, it's not going to be as liquid as saying that you have gold. Okay. So in adversity, people invest in putting money into gold. And as I said, whenever we was analyzing this multiple times, which was probably around about this time here, I said, bullish on gold, man, going for these highs. Wish I did hit the button on them because the market has just been pushing up and gold moves in gear, loads of pips. All right, pushing up into these levels. If I drop my time frame down to my 4 hour, we can see 4 hour structure making higher highs and higher lows. Ping, pong, ping, pong, ping, pong into this imbalance, 50% to this balance. And now it looks like we may be pinging again. All right, so let's have a look at our ping on a 1 hour time frame. We're getting a break of structure on the 1 hour time frame. Have a look. All right, because this was the retracement. Oops, this was the retracement. You see? And now that market is broken, price is broken outside of that market over here, broken this structure. Broken this structure over here. All right. And potentially we might see a little retracement back into this imbalance. Okay, have a look here. I'm going to zoom in. And then maybe that market may continue to be bullish. Okay, because we can see this imbalance that's formed. I'm going to just hit my little button here. Imbalance that's formed in here as the market's come and closed above this level in here. Now I'm showing you this wick because on a smaller time frame, these wick is some candles, I'm sure. Let's go to 15 minutes. It's still a wick, okay? But it's a level in here. Yeah, ultimately, we might see this market come and retrace back in here, giving us a lovely entry, okay? Somewhere around in here, okay? And then maybe continue to push up bullishly. All right, at least trying to hit equal highs, okay? Equal highs in regards to, if it retraces back in here, maybe, getting back up to whatever equal high, wherever it retraces from, and then you're talking about, is this market going to get up into these levels? That's what you're talking about. Over here is our three kings. I'm going to make red thick. And could this market go and get up into these levels? Yeah, it has the potential to do whatever it wants to do, gold. Okay, so for me personally, looking at it right now, I can't just hit the button now after this massive rally up here. Because if I do that, then my stop's got to be at least down here. And I just don't want to have 10 zillion pips in regards to my risk. Okay, I've got to wait and see if this market comes back down after breaking structure, breaking these levels in and around here. Have a look, like in and around here, this kind of area. I want to see if this market gets back down in here, all right? Because as we can see on a larger time frame, so I'm going to draw it in because when I move the indicator changes. So we've got here our imbalance, 1 hour imbalance, 1 hour IMB. Okay, and then if I drop my time frame, let me get rid of this indicator. Don't need it. If I drop my time frame down to my 15-minute, then we can see within that hour, we can see here, this is a 15-minute IMB. If I drop my time frame down to my 5 minutes, try and narrow it down. Within that 15-minute IMB, which is here, okay, let me try and make it a little bit heavier. All right, within that 15-minute IMB, we've got some different little imbalances. We've got a 5-minute one here, which I don't think is the biggest draw. Got the market. And we've also got one in here. I think that's the draw. Personally. Like that, in here. And we could, we don't need to go any lower than that. We could keep going, trying to narrow things down. But I don't think so. Personally, I'd like to see this market do this. And, you know, your high risk is going to be when you see that market breaking structure, you go right below the last low in gold. That's quite difficult because it can get quite volatile, okay? Or you're going to put your stop below this swing low. Yeah, or sorry, open up your time frames, being able to understand this is a 15-minute low here. On a 5-minute time frame, maybe you might say, you know, below this little 5-minute structure in here. Yeah, just understand when you're the larger the swing low you're below, the safer you are, but the lower the reward. So the lower the risk, because ultimately you're making this zone bigger, so your lot size is going to be smaller, and your reward's going to be smaller because this is a bigger area. And if you say, you know what, I'm going to go high risk or medium risk below here, the market starts to turn around in here, and you put it below this 5-minute low, well, great. But again, you know, you've got less risk, more reward. Also higher risk, sorry, because you're smaller here and higher reward, but you could get whipped out for nothing. And if you get very aggressive, if the market starts to turn around in here in a little small time frame, you put it below the last low, okay, it's higher risk and higher reward. This is down to yourself. If I was to turn around and talk to you about win ratio, wanting to win trades, place your stop below a swing low on a minimum 5-minute time frame. Yeah, so that means that this trade here carries a 400 pip risk because it's gold and the pips metric's different. And maybe you're trying to take this trade up into these equal highs here. That here to be at 1.2, 1.3, 1 to 3, 1 to 2, 1 to 2, 1 to 3. Or ultimately, maybe you're aiming for this market to, over the next weeks or so, ding-a-ling-a-ling-a-ling-a-ling, to go and capture that liquidity up into that level. That's a 1 to 8. Okay. Obviously, as a 1 to 8 being risk averse, obviously, if you're uber aggressive and you did something like this, it's a madness. It's a madness. Okay. It's like a 1 to 42. Yeah. Even below these 5-minute entry here, it's a 1 to 16, 1 to 17 life-changing trade, depending on your account size. Okay. But yeah, so I'm going to pop an alert in here because I think I want to get involved in this. If it really taps down into that lower imbalance level, if it taps into this higher imbalance level and starts breaking structure, then maybe. But I'm just always concerned about gold. Might decide to just pop a UE on man. All right. So I'm going to pop an alert in here anyway. I'm going to pop an alert right in the middle or a little bit above that entire 15-minute imbalance, crossing down. But I'm also going to pop an alert right above that 5-minute imbalance that I can see it sitting in here. All right, if it's going to let me. So I've got 2 alerts in that zone. And I will also pop one alert just above here if it just doesn't care about what I'm talking about and just decides to say, nah, mate, so you think I'm going up. All right, have a look at our GU. Still doing the hokey cokey over here. Still doing the hokey the Andy Pandy. All right. Still working out what else we want to do. We might just see this very so slowly before the news, before Jerome Powell speaks, just trickling in that direction. You might see it just trickling in that direction, trickling. Then the news might come, bang, we get into that level and start to do something. Who knows? Who knows? All right. Any questions? Any questiones? I've been moving and just shuffling through things. Any questions? Any questions? All right, so let's have a look at the news real quick. We've got GBP news coming out in 13 minutes. Interesting. Let's have a look at GBP news coming out in 13 minutes. Red folder. PMI. GBP news PMI. I think maybe we'll get that push now. It's possible. We might see something happen right now. I'm looking at a bit of an imbalance. Maybe we'll roll the dice. Okay, we shall see. Okay, we've got PMI coming out in 13 minutes, 9:30. And then we're going to see this market. Maybe we'll see something happening. All right, maybe not. Okay. And we've got, obviously, we can see here Canadian news coming out. And then we've got US dollar, red folder, PMI news, and then Fed Powell takes the mic, yeah, and starts saying his thing, yeah, and making the markets move. Guys, any questions? Absolutely fantastic. All right, we had a little session here. You just saw me going through the charts, breaking things down. You had an inside window into my brain of how I trade. For the people that are watching this on YouTube and getting value, be sure to like and subscribe. This will be uploaded shortly to YouTube, and it has been documenting my progress and trading predominantly GU and a couple other pairs. I think we trade some Euro JPY as well, and maybe Euro CHF as well. We've traded a couple of things over the last couple of weeks. Some US 30. But yeah, have a look, see the strategy, see how we break things down from the higher time frames, purely market structure and price action, guys. Yeah, market structure and price action, understanding how to manage our risk and understanding the psychology of trading and being able to take shots. You're not going to score if you don't take your shots, but you have to manage your risk when taking these shots. All right.